Joining us on the energy markets, RBC's Helima Croft, also a CNBC contributor. Do we need to know anything more than just the jobs number and slowdown worries? I guess the yen carry trade, all those things factoring into oil. It's not going to 80 now, is it?
Well,
90?
the thing is, we have the broader macro concerns that you've brought up, but we do have specific issues in the market on lackluster Asian demand. So I think that had already, before we had the jobs report or before the manufacturing data, we were concerned about weaker imports into China, weaker refinery utilization rates in China. So there had been this anxiety about lackluster Asian demand, even before the latest concerns we saw last week.
We did have a lot of luxury goods not being sold in China. So before we had our jobs number,
right.
We were already really worried about one of the most populous nations.
Right, and for the oil market, it is the engine of oil demand growth. But if you back up to June, we already had concerns about our oil market taper tantrum when OPEC came out and announced a schedule for bringing barrels back onto the market. So now I think the interesting question is, with this weaker economic data, with the existing concerns about Asian demand, do they have to put on pause their plans to increase output in Q4? I think that's obviously going to be a non-starter. If the trend continues, I just can't imagine OPEC would go forward with increasing output into this market. The question is, would they go to the opposite way, given the conditions we're seeing?
Is that possible?
I mean, they have said that. I mean, one thing they have learned since 2015 is you don't let a sell-off extend without putting a circuit breaker in. Now, we've seen them do circuit breakers before. Remember the October 2022 meeting that got the White House so upset when they basically said, we're going to have this emergency meeting and we're going to come in with a cut.
Right.
So the question is, would it be effective now? But certainly, I don't think they're going to go forward with increasing output into this market.
Then is a six handle in the cards?
I mean, we just have to see where this story goes. I mean, you can't take it off the table. I mean, we've talked about the weakness in Asia. The rest of the market hasn't been so bad. We have to watch what happens still in the Middle East. We've largely faded the story of the war, but if we were having this conversation on Wednesday, we'd be talking about potentially military action in the Middle East. So we still have to pay attention to that story, but obviously right now everyone's focused on the economic data.
So even if there is something, I hope there isn't, but if Iran does do something, you don't expect that to be long-lasting for the president?
Again, what's going to be interesting is that we had that exchange of fire in April between Iran and Israel, was relatively contained, did not lead to any market disruptions. But the question is now, are we looking at something more coordinated with Hezbollah, Iran, Hamas? Is this just a repeat of April, or is it something more serious?
They didn't seem like they were ready to go full bore in April.
They were not ready to go full bore. They basically told, people in the region what was going to happen. Right. Obviously, the message conveyed. The question is what we're going to see in response now from Iran materially different from April, or is it just more of the same?